thank you very much for joining. This is a Japan-specific session. Our goal is to explain to you, share what's going on in Japan without any bias and also no propaganda. So I have perfect people with me, namely Jason Lowe from GIC, and Junji Kevin Takaoka. He goes by Kevin as well. So, before introducing those speakers, I'd like to quickly introduce my organization named FinCity.Tokyo, so that you understand why we are talking about the Japan's economics and also ecosystem right now. So FinCity.Tokyo is the public-private joint venture. Also, we include some universities such as University of Tokyo and Tokyo Metropolitan University, etc. Tokyo University of Science too, to upgrade our ecosystem in Japan, also promote Tokyo as a global financial hub as well. So basically, our mission is to promote and also convey, disseminate about the information about Japan. And also, we like to also obtain your honest feedback to the extent possible, so that we can gather your feedback and also put together our policy recommendations to upgrade our regime and also legislation in Japan as well. We also entice highly talented financial professionals, such as investment professionals and also fintech entrepreneurs as well. So that's my mission. And we are still 70% funded by Tokyo Metropolitan Government. Remaining 30% is funded by major financial institutions, both Japanese, domestic, and also international, such as Mitsubishi, UFJ Bank, Nomura Holdings, and also like an international asset management firm such as Alliance Bernstein and Brookfield from Canada as well. So that's the background. Jason, maybe you can introduce yourself quickly. Jason is from GIC, Japan specialist.
Yeah, sure. So my name is Jason Lowe. I spent my career at GIC. And I think pertaining to Japan, what's important is that I co-founded the Japan Value Add team back in 2019 to spearhead a special task force to do more investments for GIC in Japan. So over 5 years, we've done about 20 investments using a playbook of first investing into funds, our LP partners, and then co-invest with them. And then if it's a listed company, we can also do direct investments using our own money. So this team is unique in the sense that it straddles across both public and private investments. It's the only team, within the larger umbrella, it's the only team in GIC that can do that. So with my teammates, we have made some significant progress. And we are looking to do more in Japan, and it's been a great opportunity and honor to kind of get in touch with FinCity.Tokyo. And happy to be here to discuss about Japan.
Yeah, thank you, Jason. Kevin, would you introduce yourself?
Yes. Hello, everyone. My name is Junji Takaoka, Kevin. I currently work with University.Tokyo venture capital arm, which we call University.Tokyo IPC. IPC stands for Innovation Platform Corporations. And we mainly, as you expect, invest in deep tech startups right now. And over the years, for example, we started our acceleration program 7 years ago. We only received fewer than 100 applications 7 years ago. But this year, or maybe last year, we have accepted more than 500 applications. So we see big increase and established ecosystem for startups in Japan. So I would like to talk, there are so many different aspects of investments in terms of Japan, but I'm so happy to talk about the inner situations of the especially technologies and IPs in Japan. I'm happy to talk about it. Okay, thank you.
Okay, thank you. Thank you, Jason, Kevin. So this morning I woke up early and prepared some presentation, but I just learned that we cannot use the projector. So I'm gonna try to explain what I put together as well. But I have a few questions for our speakers. So question number one is, how do you assess latest Japanese market development? Right. So, before getting the answer from those speakers, I'm going to share some of the perspectives and data sets. So Nikkei average hit record high several times since the beginning of this year, right? So in this sense, Japanese investors are quite bullish about Japanese market. However, you may be aware, Nikkei has 3,950 companies. Japan has 3,950 companies listed. And out of those companies, 66% of the companies are categorized as a micro cap, below $300 million in market capitalization. So we have quite a few tiny companies in Japan. And you may be aware, United States has 4,200 companies listed in NASDAQ and NYSE, New York Stock Exchange as well. And we are anticipating that over the next 3 or 4 years, Japan might surpass the US in terms of number of listed companies as well. I mentioned Nikkei hit the record high several times. However, in dollar terms, Nikkei didn't hit record high as well, because yen is getting weaker and weaker as well. So from a global investor's perspective, we shouldn't be too excited about the current stock market situation in Japan as well. But we have a lot of attention from global investors. And in fact, we see a lot of billionaires in Tokyo nowadays, such as Jack Ma and Roman Abramovich, who used to own Chelsea, Russian oligarch, and Mark Andreessen and Elon Musk as well. So lots of billionaires are quite visible in Tokyo, and I spotted those people quite often times as well. So given this situation, are you optimistic about Japanese situation? And then what will be the key challenges to further invest into Japan? So starting from Jason.
Yeah, sure. Well, the short answer is yes. We, as mentioned, we set up the team back in 2019, right? And we saw that inflection point. I mean, it's a long stretch out inflection point that Japan has the opportunity to transform, right? So as Keiichi mentioned, the last time Nikkei was at close to 40,000 was back in 1989. And it has been a long while, more than 30 years after that. And right now, we are finally at that stage. Granted, yes, in US dollar terms, it's not at the peak, but in yen terms, this is a big and important threshold, right, for retail investors, domestic investors, and for general people who looked at Japan. When Nikkei was 40,000 back in 1989, the PE was 60 times, 60. And today, we are at 15, 16 times. So we do see a lot of opportunity that the Nikkei can further go up. And the other statistics I really want to share is that Keiichi mentioned about the micro cap, but the other famous one is that almost 50% of the Nikkei, or rather of all Japan listed companies, trade below 1 times price to book. And this has been the case for many, many years. But today, there are levers to pull to make these companies trade above book, right? So I can talk about 3 of them. The first one is what I would call self-help, right? Self-help. So some of these companies, they are large cap, visible, brand names, and it's kind of an embarrassment to trade below book, right? So the company themselves want to transform. And the poster child would be Hitachi. Hitachi went through all that, and since they succeeded, a lot of companies want to emulate Hitachi and do that as well. The other way to really improve, well, in the end, it has to be self-help, but it's really external pressure from investors, friendly activists, sometimes hostile activists, when they are able to exert influence on these Japanese companies, and the companies themselves realize, okay, we have to change. If not, we will lose our jobs, right? The management will lose their job. So that has been a positive force. And interestingly, the Japanese government is also, from what I can see, is also supportive of these efforts. And then the last thing, which is also very related to what we are discussing here, is that some of these companies probably should be privatized. The big boys like the KKRs, the Bain, Carlyle, they have been in Japan for many, many years. They have started to privatize some of these companies. And the founders themselves, the management themselves, they feel that maybe there's no point to be listed. I'm trading below book. Why don't I buy back my own company and just enjoy the cash flow coming from this? So all these opportunities coming together, we see strong momentum for the Nikkei to go back to, exceed 40,000 and even go towards 45,000 and maybe a few years out, 50,000.
Thank you, Jason. Kevin?
Yes. First, I'm also optimistic about the opportunities in Japan. Several reasons. One is, like I said before, we see so many entrepreneurs and aspiring scientists, that are looking to start up their companies. Let's compare it with 10 years ago. It was really insane to start the deep tech startups. Actually, people are saying, there's not going to be any exit. You can start the companies, but there's no exit. But the landscape has totally changed. Right now, University of Tokyo itself is partnering with 20 other universities and private research labs. All of them are, aspiring to produce startups. And also, we are building the good relationship with other foreign venture capital firms and investors as well. For example, Cabinet Office Japan is now starting the initiative, Global Startup Campus. And also, they're partnering with foreign venture capital firms to be more active in Japan. Like A16 is one of the examples, but actually there are tens of other firms behind it. So in terms of the ecosystem-wise, Japanese startups are really ready, in terms of the number of startups. And we're seeing the next emerging thing, which are more global-focused, growth. So everyone has realized that, startups, we see so many startups, coming up right now, but the issues that we think, we, not just venture capital firms, the government, everyone, the tech startups in Japan have much more potential than just, be active in the domestic market, in terms of IP, in terms of the management and everything. So now foreign investors are coming, to support those startups from really early stages, not, the later stages. So the ecosystem is really, really getting more and more active, not just in a domestic perspective, but diversity-wise, it's more, the ecosystem is opening up. So I think in the next 10 years, we're going to see more Japanese startups, that are, and the exit valuation is much, much lower than expected, for the past 10 years. So we're working fiercely, to not just IPO, but M&A, for example. Very, very few startups actually do the successful M&A so far. But that there's we see the good gap, untapped potential, for those startups. So in terms of IPO and M&A, we see so many gaps to fill in the next 10 years.
Okay, thank you very much. Thank you. So so Japan is changing a lot over the last probably 5-6 years. And one quite symbolic example is the Dean of University.Tokyo is encouraging graduates to start their own businesses or join startup companies. And some of the, I'm checking some articles saying that 1/3 of the U of Tokyo graduates are joining those small companies, startup companies before IPO or starting their own businesses as well, which is quite different from past, right? Most of people join the government agencies or large cap corporations. I think we have increasing number of aspirational entrepreneurs in Japan as well. However, there are some concerns still. I had an investor roundtable with Canadian pension funds in June. And good thing is they showed up. We invited them. We made a cold calls to those Canadian largest pension funds. There are 9 or 10 large pension funds such as OMAS, Ontario Teachers, and CPPIB, and CDPQ, etc. And they showed up. So that's quite encouraging. But we received some feedback saying that, yes, Japanese technologies are interesting. However, especially climate transition technologies are quite advanced in Japan, but we don't know how they can monetize. Intellectually, academically interesting, but we don't know when we can have meaningful return out of investment. That's one type of feedback. Second feedback is, well, our size of the ticket for private companies is at least $50 million. It's same for GIC, right? At least $50 million US dollars. And then, which is like 75 oku, which means 750 million yen, which, is that right?
Yes.
Yes.
Almost 5 million.
So that's kind of average market capitalization or valuation at the time of IPO in Japan as well. But they don't want to acquire, right? They want to stay as a minority or maybe significant minority investors as well. So we don't know there are any meaningful company to allocate our money into Japanese startups as well. So, and then Japanese LPS, limited partnership, is very peculiar. And there are lots, very limited information about how this setup is functioning as well. So it's people tend to hesitate in Japan, etc. So there are some concerns from Canada. Canada is so far away, and they have been always looking to Japan through the United States. So their understanding of Japan is limited, unlike you guys in Southeast Asia as well. So how would you react to those concerns from your vantage point, Jason?
Yeah, I think they are valid concerns. New technologies always take time to mature, and the initial J curve would be difficult. It's difficult. So I would say that some of these investment opportunities into new technologies may not be for institutional investors like GIC and some of the Canadian pension funds, but VCs, Junji, Kevin's ecosystem will be able to help some of these companies. In terms of the size, I would say after looking at Japan for around 20 years and the last 5 years being deep inside Japan, there are various ways to look at it, right? So one of it could be a chicken and egg issue whereby you do not have the large funds, therefore there are no large opportunities. I think over time hopefully that can resolve itself. We are seeing a lot more billion-dollar funds, especially in the PE space today in Japan. So when more of this comes about, and even in the VC space, right now the sizes are still in the range of 3-digit US dollar million, the largest ones. But over time, hopefully when the funds grow in size, they will be able to find bigger opportunities. And also, the other thing we didn't really talk about is roll-up and consolidation. If some of this happen, the ticket sizes will also grow. So I think a few of these factors coming together will help resolve some of the issues that we talked about.
Thank you. Thank you. Kevin?
Yes, yeah, that's a big, we often hear that Japanese startups do not have this good business model for the world market, which is kind of true currently, and they're going to realize it. And the issue, which is pretty solvable, is the way they start up their companies, because they start at the time they start their companies, the team is all made, in Japanese guys, and then they only kind of, have interviewed with potential Japanese business clients, and also their kind of, goal is like IPO in the Japanese market and maybe M&A for against the Japanese corporations. So in the past 10 years, the entrepreneurs and startups are like only focusing on, they could not have any, actually, most of them are, first-time entrepreneurs in terms of deep tech, and, they have no other way but to just focus on the domestic market. But I think are changing recently. Like this month, we're going to have a conference with Vertex, which is a We Challenge, all conducted in English. And we didn't really expect many applications, but actually we accepted more than 1,000 applications, all in English. Which is not unusual maybe in Singapore, but which was a big surprise for us. So startup entrepreneurs are much young, generations are younger and younger, and they are much more accepted in the global market. And also, as I said, with the Cabinet Office of Japan, investors from outside of Japan are looking to, support the early stage startups. By early stage, I mean even before a seed, like seed technologies. And the network, seed technology network, IP network is so kind of closed, traditionally. But University of Tokyo is opening up, that situation to welcome, foreign investors too, to untap the potential growth opportunities for tech startups. So, Japanese tech startups are definitely going to be a key player in the Japanese stock market in the next 10 years. But also, they're going to be, I hope, very active in the global market as well.
Thank you. Thank you, Kevin. So we only have 5 more minutes. I'd like to touch upon the wealth in Japan and also capital raising opportunities in Japan as well. Japan actually, Tokyo is number 3 in terms of millionaire population in the world. Number 1 is, of course, New York City. New York City has 350,000 millionaires, followed by San Francisco Bay Areas. They have about 305,000 millionaires. Tokyo has, actually Tokyo was number 2, but Tokyo was surpassed by San Francisco due to the exchange rate. So Tokyo also has 300,000 millionaires, right? So we have quite sizable million population. Singapore has 250,000 millionaires, right? So given that Singapore is so small, Singapore has so much density of millionaire population as well. When it comes to billionaire, Tokyo only has 14 billionaires. But we are now counting some of the billionaires are spending significant amount of time in Tokyo as well, because billionaires are not domiciled in one jurisdiction anyway. So it's a bit unclear how much time billionaires are spending time where. But we have officially 14 billionaires in Tokyo, while New York City has 60 billionaires. Singapore has 30 billionaires, right? So Japan has quite a few wealthy people living there or spending significant amount of time in Japan as well. So, but what we haven't done enough is connecting between Japanese wealth with Japanese business opportunities yet. Maybe we have quite a few billionaires spending time vacation or safeguarding their wealth because Japan is very safe and rule of law is very reliable as well. But how would you encourage Japanese international wealthy individuals to spend more money in addition to touristic activities in Japan? So starting from Jason, what do you think? We have a few more minutes, but
yeah, this is out of my circle of competence. Yeah, I would just make general comment that Japan is a very nice place, as most of us would know, to visit. There's so much to do in the summer, there's so much to do in the winter, there's skiing. So definitely just by the natural attraction of Japan, people will gravitate towards those locations. Staying there is a different issue. There's language, jurisdictions and whatnot. So I would say, coming back to jurisdiction, I think a big part of it, which is I understand is very, very difficult staying there for 5 years, right? Is for the government to think about taxes, right? How to make it more palatable for rich individuals to be in Japan and yet pay the same tax rates as some of the other countries in Asia. Yeah.
Thank you. Kevin?
Yes. So I've seen several family offices in Japan that are very active in LP funding and venture capital firms too. But I would say most of them are not too familiar with those investments. So I think it's going to take time before they are much more confident in investing those investments. But I see more and more those guys who are beginning to show interest, which is a really good thing. And another part, the wealthy segment in our global market, I often go to New York, and actually almost all of them, have good human connections with Japanese wealthy guys, and they actually understand, very well, how the financial situation is in Japan. So again, I'm really optimistic about those wealthy guys investing much more, educated and financially, and investing in those, more untraditional markets.
Okay, good. So we have to wrap up, but hopefully you guys are more motivated to invest in Japan or invest with Japanese. So thank you very much for this opportunity to share our perspective about Japanese investment landscape as well. And please give a big hand to our distinguished speakers.